If you're invested in stocks or crypto or thinking about it, you need to watch this till the end. The news about the Epstein File has shaken markets, and experts are predicting volatile days ahead. In this video, I'll break down how the US stock market and crypto could react, what investors are thinking, and most importantly, what you should do as a beginner to protect your money. Stay tuned because this is educational, not financial advice. Before we dive in, remember, this video is for educational purposes only. Nothing here is financial advice. The stock and crypto markets are highly unpredictable, and while we analyze trends, you must do your own research before making any investments. Think of this as learning how the market reacts to big news like the Epstein File. The Epstein File has caused major headlines worldwide, raising questions about financial and political instability. Historically, news of this magnitude affects high-risk markets like crypto first, followed by ripple effects in stocks, especially tech, energy, and financial sectors. In this video, I'll explain what usually happens in similar situations, why markets react the way they do, and how you can spot trends without panicking. Let's start with crypto. Bitcoin and Ethereum are often called market barometers. When shocking news hits the mainstream media, investors panic sell, creating a short-term dip. But then, after the initial chaos, smart investors often look for buying opportunities. In previous events of market fear, Bitcoin sometimes drops 5 to 15% in 24 to 48 hours, then stabilizes. Altcoins like Solana or Cardano can move even more dramatically. So if you're holding crypto, don't panic and consider whether you want to average down or wait for recovery. Next, the stock market. Big tech and finance stocks are usually affected first during political or scandal-driven news. Companies like Apple, Microsoft, and JP Morgan may face temporary dips due to uncertainty. Historically, volatility spikes for 2 to 5 days, and then markets usually stabilize if economic fundamentals remain strong. Small-cap stocks or highly speculative companies tend to react the most. Diversification becomes your best friend here. Spreading your investments across sectors helps reduce risk. Traders often watch support and resistance levels during news shocks. For example, if Bitcoin drops below a key level like $25,000, short-term traders may trigger stop-loss orders, causing deeper drops. On stocks, indices like the S&P 500 and NASDAQ have technical buffers, but short-term fear can create fast but shallow dips. Remember, the market reacts emotionally first, logically later. One reason the market reacts to the Epstein File is fear and uncertainty. People sell before thinking rationally, which is why media headlines can create exaggerated reactions. Experienced investors often stay calm and look for value opportunities while others panic. This is where education matters. Knowing why the market moves can prevent emotional mistakes. If you're new, here's what you can do. 1. Don't panic sell. Temporary dips are normal. 2. Diversify. Don't put all your money in one crypto or stock. 3. Use small allocations. Consider investing small amounts over time instead of one large sum. 4. Track trends, not headlines. Market volatility from news usually calms after 2 to 5 days. This is not financial advice, but a beginner-friendly risk management strategy. What to watch next? Over the next few days, watch these indicators. Bitcoin and Ethereum daily price changes. NASDAQ and S&P 500 short-term dips. Tech and energy stock movement. News updates regarding the Epstein File. This helps you learn how news affects markets without making emotional trades. Market experts suggest that short-term volatility is expected, but long-term fundamentals remain key. Investors who panic often lose value, while those who study the market and allocate wisely tend to recover faster. Learning this now gives you an edge for future news shocks. Short-term dips in crypto and stocks are normal after shocking news. Diversification reduces risk. Technical analysis helps predict temporary reactions. Stay calm, educate yourself, and avoid emotional decisions. Remember, this video is educational, not financial advice. Markets are unpredictable, and learning is more important than trading. If you found this video helpful, hit like and subscribe to Truelytics for simple, clear, and educational insights about stocks and crypto. Share your thoughts in the comments. Do you think the Epstein File will cause more volatility, or is the market already pricing it in?